Guys, how's it going? Ace of Trades back once again with another video. So today's video is going to be on how to set up a trade idea or how to frame a trade idea using multi-time frame analysis. Um, Pretty simple, straightforward video, but it's probably one of the most important things that we need to know is how to actually, what to look for a start, how to put things together. So essentially, how do we build our trading plan around a trade idea? Let me just get rid of some of this. My laptop wants to load. Sorry if I'm sniffing a bit. I've got my hay fever today. Okay. So the first thing that we're going to want to look for when we're framing up our trade idea is our 4 hour or our higher time frame bias or direction. So I'm going to set up a Euro GBP trade that I took here just because it's a really nice example of how everything comes together and how we can use everything in our trading plan to counter on trades. So yeah, let's get straight into it. So here we've got um, a really nice sort of bullish break to the upside on the Euro GBP. So you can see here essentially what we've got is something a bit like this. This isn't our low. Sorry, this is our new low and this is our high because we broke this structure and this is where we start to pull back from. And because this is our low is going to be the lowest point before this break. So it would actually be somewhere, if I can get to it, somewhere just here. Okay. So after we've established now that we're bullish, because it's such, um, an impulsive push to the upside, I don't actually need a second break to the upside to confirm that the trend has changed. We can see quite clearly that this is a change in trend and price is likely going to want to, go higher from this sort of area. If we look at it on a bigger time scale, my laptop's being really laggy, so you just have to bear with me. So yeah, we've been stuck in sort of this like sideways price action for you know quite a couple of years now. We get this break to the upside on the daily as well, which is really what I'm looking for. And then yeah, so here now we have our 4 hour range. So if this lets me put it on here, there we go. So now I've got my 4 hour range, what I'm working with. So what do I need to look for? Well, to go long, I need price to come back down to the equilibrium. So let me just play price back here for a second. So once we start to, once we get to, excuse me, two bearish candles to the downside, that's when I can say, okay, we're starting to pull back. This is where price might start to look to pull back from. So we've got these two now. So I mean, really, you can short from here down to sort of anywhere in this area. I wouldn't be shorting past the equilibrium because we know once we get below the 50%, that's when the fair price comes back in, the discounted price, and people might start to look to long. So it's just more risky. And because we do trade multiple pairs, there's no point taking risky setups if we don't, need to. I'd rather wait for the extra confirmation. So let's just play it forward for a second here. Okay. So yeah, so now we've come to this, excuse me, like demand zone. It's not great. It's just wicks, but it does come from equilibrium, and we know that we will probably get a reaction from this. That's why I set a trade up here. I didn't actually take this trade, but it didn't play out, as you can see. I won't drop down to the 15 minute because there's no point. I'm going to show you a trade from down here. But yeah, so pretty much anywhere from here we can start to look to take the longs. We obviously want to wait for the 15 minute to set up. You can tell just by looking at this on the 4 hour that this demand zone did not give us any 15-minute setups to take here. And we have got this liquidity below this or above this demand zone right at the extreme to potentially take trades from. So yeah, let me get down to the demand zone. So what have we got first of all? So right now we've got our 4 hour bias. We've got some 4 hour points of interest. We're in the discount on the 4 hour. So now we're going to want to start to go long. Okay. So what do I need? I need some structure on the 15-minute to break. which we have here. So this is our first 50-minute structural break. It is also a flip as well for the additional confirmation. Um, we need the sweep first of all as well. I just pause it there to sneeze. So yeah, so we need a sweep. So yeah, at the minute we've not swept anything. We've mitigated the 4 hour demand zone. We haven't got any kind of sweep. So this is my liquidity resting below here. That's what I need to see taken out before we look to get into the markets. So let me just play it forward for you. Still nothing. Still nothing. Still just waiting and watching. I got my alerts set at the low or the high probably just to make sure I know when the liquidity is gone. And during the London session, we take liquidity here. But that's not all I need to see. So we've got one break below. I'm not worried about that. To me, the break below is just a liquidity sweep. We need two breaks to confirm the direction. So we swept liquidity there. Now I'll be looking for a break of structure to the upside. So no break. We have our break here. This is where it broke structure. And now I'm going to be thinking, okay, this is where I want to look to start entering the trades. So, okay. Oh, yeah, this is where I had my entry set up. So from this low here, oh, yeah, there we go. Up to this high, I think it was. Have a look. I think it might break against the upside actually. And then I took it quite high. It looks like that's the case. Yeah, okay. Yeah, so we get another break to the upside here. So my idea now was, well, this is the area that's taken liquidity. So this demand zone here is probably where likely where price is going to be attracted to, because that's the area it took liquidity. That's where this whole move started from, where the impulsive push slips are started from. We have filled most of the imbalance now, which is not ideal, but it's not massively important. We've got liquidity resting below here, got liquidity resting below here, and we've got liquidity resting below here. So we've still got a lot of liquidity to take on the way down. This hasn't swept anything major. This isn't really a sweep. Um, I wouldn't count that as a sweep. Let me go to these just to tidy the charts up. So yeah, this is where I was looking for price to retrace now, tag me in, um, and obviously go long. So this was something like what I had on up to this high here, 3R, just over 3R, and then yeah, just set the limit and put some orders on, some alerts on, sorry, and just wait and see what happens essentially. So we're still going down. So we've had a sweep there. This is obviously just taken out this low and this low, but yeah, nothing great at the minute. Still waiting, still waiting. Alert still set, still not doing anything. Still haven't even checked it till the alert goes. Okay, yeah, so this is actually what happened here, yeah. So I just moved it up, just moved my um, entry, so I cancelled the old order, put this order on. Okay, yeah, this is what happened here. Yeah, so I had that on, it didn't quite come back. Excuse me. And then, yeah, we broke the high again. I think it was just a sweep. But yeah, so that's my new target, this high. So let's just have a look. So still, I was now considering, well, this has swept here, this swept this London session and this New York session, but it hasn't really created the push up to break anything. So this is likely going to get swept. It's probably just inducement for this zone or a zone a bit further down. This hasn't swept anything either. So, we can say price is going to be attracted to this area. We've also got this demand zone here. We'll make it sort of like this. Which price might be attracted to. So yeah, during this London session, saw this high go, and I thought, yeah, this is still a nice position because all we've got now is just more sort of trend line liquidity. So yeah, I was really happy with this setup. This is one I actually shared in my Discord as well last week or whenever it was, or earlier this week. And then there we go, we're tagged in, come down to the extreme. swept all of the internal liquidity, come back to the demand zone that actually swept uh, our first lot of 15-minute liquidity here, mitigated this, and then, as you can see, just starting to really run off within, how long is this? Why is it being so fucking laggy today? It's pissing me off. Okay, so within 2 hours, 15 minutes, there's 3 hour hit and the profit target reached. Um, yeah, not really much more to say on that. Really nice trade. I will just run through again exactly what we're looking for here. So, excuse me. So it's our 4 hour bias and our narrative. So we have a 4 hour direction. We find some 4 hour points of interest where price might be attracted to trade from. Once we're at our point of interest, so this point of interest I'll be watching, seeing if we get a setup. If we do, I'd hit it. Same with this one, and same with this one. It's not, price isn't likely going to come back to all three. Typically it will come back somewhere around the 70% mark and then run off. It doesn't always come back to the extreme. Um, and you won't always get a setup. Like, you'll be able to see here clearly there's no breakthrough structure here on the 15-minute. That's pretty obvious even on the 4 hour. So we're not going to be taking anything in here, just trying to jump in without the market first confirming it. But once we have got our points of interest on the 4 hour, we've got our 4 hour direction, and we know which way we want to be trading. What we then do is wait for our 15-minute shift in structure. So momentum shift or market structure shift, whatever you want to call it. We just so happen to have two breaks of structure here. I'm not too bothered. One's fine for me if it's pro trend. If it's counter trend, I do need to see two. We have our sweeper liquidity. We've got a demand zone, and we've actually got some inducement as well, which isn't. I'm not massively bothered about inducement, but it does help. And then we simply take our Fibonacci from the low to the high, and set our limit order on the 75% limit on the Fibonacci level, and that's really it. This was a very nice trade, textbook setup, 4 hour bullish, 15-minute realignment, sweep, break a structure, and enter, and that's really as simple as it is. There's not a whole bunch more to it than that. There's multiple ways you could have entered this trade. You could have waited for, this demand level to be hit and just entered off the what's it called, the bullish retracement candle like this. You could have just set your limit order on this demand zone, slightly above this demand zone, something like that. I like to set it at the 75 fib level just because I know that's where price is attracted to. It's maths. I don't know how it works, but it just does. Tested this for years and years and years worth of data, hundreds of hours worth of testing. So I know it works. It's the way I like to trade. It suits my lifestyle, set and forget. And it gives me the confidence to be able to, get on with other things in the day. I know I've got limits on, or I can just go and check the charts. I'm not stuck to session trading. I don't have to trade certain times. I can trade, as and when I choose. So that's why I choose to trade like this, and I love it. So yeah, that's all for now. I'll carry on with the weekly or bi-weekly videos as long as I can think of ideas to do. I don't want to keep doing trade recaps. But yeah, thanks for watching, guys, and I'll see you in the next one.